There is a market worth over $100 trillion that impacts your mortgage, your job prospects, your stock portfolio, and even the price of Bitcoin. It's actually the bond market, and it's the most important piece of the global financial system. Now, people and companies often borrow money, but so do governments. And when a company or a government needs to borrow money, they do it by issuing bonds. The US Treasury borrows that money from the public by issuing bonds. As the government needs cash, the Treasury holds auctions, selling bonds to investors all over the world. And these are the kinds of questions that bond investors ask themselves to determine what yield makes sense for them to lend their money out at. The result is that the market interest rates are really just the yield that global bond investors are demanding at any moment in time. It's all based on what they think the future holds. Now here's where things get interesting, because if market rates go up, then the cost for the government to borrow also rises. Right now, the US government has over $36 trillion in national debt that they have borrowed from the public over time. But what's even more important is at what rate are we paying interest on that debt? Because when rates go up, then the government has to spend more just to cover the interest payments. And that's why bond yields matter. Not only does it impact your mortgage, but it also shapes the financial future of entire countries.